Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending October 24th, 2014. Had a very interesting finish to the week, a positive one, very strong bullish finish. What I've got up here on the screen, you can see is the E-mini S&P 500 futures, and we've got this. Got a couple things I wanted to show you here, just so that you can understand what I got going on the screen here. These red lines, that was the high for the year. The red line for the low for the year. You can see we're down 10%, almost exactly 10% in the E-mini S&P 500. This blue line right here was the opening price for the year. So you can see just for 2 days, we actually was underwater for the E-minis. And then we had a very strong rebound. We've got this V bottom like this. Now, I've told our members these V bottoms are very rare, particularly when you have a 10% drop on an index from the high. 10% is an official correction territory, but we're obviously way away from that now. And we're right back up in this area here. We got a couple of key things that we got to clear. But this is a really interesting pattern. If we just zoom out a little bit so I can give you guys some perspective here on this chart. You can see that we've been in this pattern since 2012, back there in Q4 2012, and then very rarely have we penetrated the bottom part of the channel. We've come close a little bit, but we really haven't penetrated it. We touched it right there. We went through intraday there, and then we just blew through it right here. We came down, and then we hit our 10% correction. And you can see just how bad, how much that sell-off was down at the bottom down there. And I told our members when it happened, I said it looked like a blow-off bottom. And again, what's really also interesting is if I blow this back up, you can see just a little bit where most of the sell-off that's happened has been a very sharp correction, generally very sharp correction. We don't have a lot of retest in these corrections. I mean, they're fairly sharp when we come down to the bottom down here and bounce up. People were expecting a little bit of a sharp correction there. It didn't come, but then you can see that very sharp bottom there. So we've had a number of these sharp buyers stepping in these little blow-offs here where people are just, constantly putting money back into the market. Now, a lot of that's because of the Fed. Although what's really interesting, in October, they're looking at, we got the FOMC meeting coming up Tuesday and Wednesday of next week, and then we get the announcement on Wednesday. But what I find interesting is, we've cleared a couple of hurdles moving back up here. But these blow-off bottoms, we've been able to play them as members. At least I've worked with our members on playing these bottoms. We've got a really interesting way to do this. Now, I sent an email out a few days ago. I want you guys, one of the things that we've been doing since 2008, we've had a pretty good run since 2008. Even with the huge down move in 07, 08 going into March of 09, and then with the strong bounce up. Since 2008, though, we've been having monthly meetings, and they've been local meetings out of the New York City area. We're just in Connecticut for a lot of local members, but I've had a lot of international and national members that would like to participate. So one of the things I'm going to do is I'm going to open that up, and we're going to do these 2-hour sessions for everybody. You guys are going to get this email for participation. It'll be a WebEx that you'll get. We always meet on the Saturday after the third Friday of every month, so that's option expiration for monthly option series for the equity. So that's when we're going to be meeting, Saturday morning, 9 o'clock in the morning, New York City time, and we'll probably run till about 11 in the morning, once a month. So it'll be free. I think you guys will really enjoy it, so just be on the lookout for that meeting invite. Now, getting back to the chart here. You can see we've cleared a number of hurdles, moving our way back up. A lot of resistance zones here. We cleared, the first primary was the 200 EMA, and then we sat at the 50 EMA, and then we finally cleared it. We got a lot of energy on Friday, and we closed strong. I'm seeing some bearish divergence in a 2-hour time frame chart and a 60-minute time frame chart. I'll show you that in a minute. We cleared this natural price zone right there. That tends to provide a lot of stiff resistance. if we can get back up into this area here, then I think we're going to have a free run and possibly challenge that. I think the likelihood of that happening near term is going to be a little bit weak. I think we may have a little bit of a downdraft before we get back up there. I mean, of course, anything can happen. But like I said, these V bottoms like this are very rare, where you just keep coming up like that. If it was a shallow one down to this area here, boom, like that, I would buy it. But down in this area, no. In fact, I was expecting a little bit of a minor rollover at the 200 EMA and then possibly another come up and challenge the 50 EMA and another rollover, and then as we punch higher like that. But we haven't done that. It's just been a flat, straight rocket ship up. I am expecting some profit taken, and like I said, with the FOMC announcement next Wednesday, there's all eyes are going to be focused on that. There may be some profit taking going into that. Now, a big part of this move here is primarily on the backs of earnings. This was a relatively quiet week. We did have a couple of reports that come out that were positive for the U.S. economy, but most of this is earnings, and we've had good earnings from on average from companies that have reported good growth rates that we're seeing, better than expectations. So that's what's given us a pretty good lift here, so that's kind of where we're sitting now. I did mention bearish divergence. If we come into a 60-minute chart, you're going to see here on the E-minis. Let's just kind of zoom in a little bit on this so that you guys can see a little bit better. You can see right in this area here, as we're forming higher highs, right? We're moving up the ladder, as they say. You can see here that, and while on the 60-minute chart, this has not crossed to the downside, it's setting up for a potential cross to the downside and a potential pullback down into this area down here. You can see the 3, 4, 5 Elliott wave pattern here that's labeled. Clearly, probably a move back down into the shaded zone area here, which would put us, right around the 1940 area, 1943 area. That would not surprise me. And if we come back to the daily chart, you'll see, surprise, surprise, right around the 1940-43 area is the 50 EMA. Okay, so that would be a very, very minor give. The key number I would look for that I would not want to break to the downside is 1919, that area right there, because that would take out that candle's low, and then the next challenge would be the 200 EMA, which is sitting just below the 1900 area. So I do believe that this is going to be solid support for us right in this area right here. But I'm looking at the initial term support, what we would call our S1 level of support, or first level, sitting right around 1943 for the E-minis. The upper boundaries up in this area here, I would say around 1968 would be our R1 level, okay? First level of resistance, and then we need to clear this upsloping trend line, which is the southern boundary of that channel. And then, of course, the high for 2014 is actually 2014.50, as you can see right here. So we've cleared a couple of hurdles, and this is where we're sitting. But one of the and for our members, I was talking about taking longs down in this area here. We have a nice way of doing it, and I'll go through some of those details on how we were playing some of these longs in our monthly session, which is the day after expiration. So you guys are certainly welcome to attend that. Just be on the lookout for the WebEx webinar invite. Let's look at the Russell. I got a lot of activity on this chart. As you can see, you may get dizzy looking at it. But if you come over here, you'll see again, the red lines showcase the high and the low for the year for the Russell. You can see the Russell had a 14.36% drop from the 2014 high. We just barely eked out a gain over the 50 EMA. I mean, we're, for all practical purposes, within a point or two of the 50 EMA. You saw where it crossed below the 200. The 200 sitting right up above us. You can also see with the S&P 500 futures, we were over the opening price of 2014. This is the opening price for the RUT, or the Russell Futures for 2014, and we're still way south of that. And you can see we have not extended as much in the RUT as we have in the E-minis. The E-minis were way back up in this area here, percentage-wise, based on the downdraft. So we're still underperforming small caps and mid caps. I'm watching this area here very closely. Should this roll over and money just not come in, then at some point we're not gonna, if we don't get participation in the small and mid cap, we're gonna have limited growth on the S&P and the Dow. It's just gonna peter out. So I'm watching this very, very closely. I want to see where this goes. Now, the Elliott wave count on this is very interesting. If you look at it, what it's suggesting right now is a potential 3-leg, maybe a 4-leg, and maybe a 5-leg down here, actually taking out the lows for the year of the RUT of 1038.60. So that's what it may suggest, but I'm not convinced that's going to be the case just yet. But we're going to get our indicators will help us play this thing out. But if we do have that kind of pattern, it'll probably be one of these kind of things like that, where we have another channel down like we have this channel up like that, and we get this chop right in here before we shift back down again. We're going to be watching this area right here very, very closely. All right, I would pay a lot of attention to this. The E-mini and the Dow, yeah, there's going to be a limit to what they can do if this guy right here can't punch through. There's going to be a limit. If we also look at the Dow, speaking of the Dow, if we look at the Dow futures, you'll see here another V bottom. I mean, it really is amazing. Now, the Dow didn't sell off 10%. You can see the Dow was only off 8.7% from the high and the low. Now, and what's the other thing, and it's the same with the E-mini S&P 500 futures. If you look at how close these guys are together, this is the high and the low for the entire year. I mean, they literally happen within weeks of each other. This goes to show you, and by the way, this was the opening price of the Dow. This goes to show you how fast, if you were just holding things, how fast you can give up an entire year's worth of gains all the way down like that. Boom. And then over this past week, we're now sitting here. We actually recaptured the 50 EMA. We actually recaptured the 200 EMA. Again, with this V bottom, I believe we're going to have a pullback. That's what I believe we're going to have. The V bottoms like this, when you have such a large sell-off like that, are very rare. Again, they can happen, as I said, but I would play the odds the other way. I would say there's going to be a little bit of selling, and of course we got potential reasons to sell when we have the FOMC and GDP numbers coming out next week, as well as a couple of other things. So that's a little bit about what I'm seeing right now in the Dow. And then, of course, the one that's just doing outstanding this year is NASDAQ. If we look at NASDAQ, I mean, look at this. Here is the opening price of NASDAQ for the year. And then you can see right there, that wasn't obviously the low for NASDAQ. It was really when it opened up for the year. But this was the first meaningful pullback from the high. NASDAQ fell 10.55%. But like the others, this one has this huge V bottom like that. And we're sitting right there at that resistance point. I could draw that line and you could probably see the resistance point. Again, with the others, I would favor a little bit of a pullback, a little bit of profit taking, and maybe a little bit of one of these kind of things. And then the market's got to figure out what it's going to do. So I would not, at this point in time, be loading up on longs. I don't see it just yet. Now, our members, we took advantage of this, and I was telling our members this would be a good one to play, and we had some instruments we were using to play this. These V bottoms, though, you do get a hard bounce. Even if you get a V bottom like this and it moves up and then it gives it all back up, this here is fun to play because it usually moves very fast. Why? Because you're clearing out all the stops. You're clearing out all the buy stops from all the people that got short over here, and that tends to move this up. And then once all the buy stops are already cleared out and there's no one left in, now you need new longs to come in and take this thing higher. And if the new longs and new buyers don't come in, then this thing gives it up. So let's see how this thing works itself out here. If we look at, and volatility was another one that was really a lot of fun for us this past week. We played volatility to the upside, to the downside. You can see the trend line that I got. I'll blow it up here so that you guys can see it. It's a daily chart, but you can see the trend line. Every time volatility has come up and peaked at this area here, I've been picking up shorts. And I would pick up shorts absolutely in these areas as well. Now, sometimes you don't know if it's going to go up higher, and you have to just go in with maybe a half of a position and add to it. But I would pick them up with the odds favoring a sharp move down. Now, I picked up some right in this area here, and then it just took off right there. I picked up some more there, and it just went straight up like that. And I'm like, holy crap. I'm underwater a little bit. But then within a day or two, we're all the way back down here again. Because vol has a hard time of staying up in this area. It's not like it was in 2007 and 2009 when we didn't know if we would have a banking system here in the United States or not, and a possible total collapse over in Europe as well. So I think vol on any of these peaks like this, they certainly welcome shorts. At least that's the way I like to play it. We've got a couple of trades that we're running to, some long, some short. We'll go through those for our members Sunday night. Bonds, really interesting on bonds. You can see the same thing with bonds. This huge move right here. This was one of the highest volume days in bonds in the past couple of decades. This move right here. I mean, this was just a rocket ship. Almost $1 billion. I think it was, $1 trillion. Almost $1 trillion. 965, $970 billion traded hands in the Treasury market. Unbelievable. And of course, that's not sustainable. So in this area here was a really good place to look for shorts. We broke a key level right there, which is that key pivot right here. I think we're going to come down and test this guy here. We may have one final attempt, but it's going to give it up. And, you know, I've been saying bonds is going to be down here like just about everybody else and their uncle. But, you know, you got to be very careful in how you trade this because, as I've said many times before, money's coming in from Europe. And because the interest rate yields over in Europe are almost on parity with the U.S., in some cases lower than the U.S. So money would rather come over to the U.S. and invest in treasuries here, as evidenced by these big scares right here where the money came in from Japan and Europe. Big money funds, sovereign wealth funds coming in. So that is keeping the bonds high and interest rates low here in the U.S. In fact, last week, the 30-year mortgage rate hit, I went below 4% again, just very, very low. But it's not sustainable. So not with our economy starting to grow like it's growing, and especially if the Feds back away. We'll still have money coming into the bond market from Europe and Japan, but I think the interest rates are going to slowly start to glide down. The dollar, well, guys, we've been long the dollar. We've had a lot of fun with it. You can see right here with the dollar, it's just been a really good track up. We had this three-leg pattern up here, a little bit of a four, and now I think it's working its way back up. It's a little bit choppy, but I think longer term the dollar can move up. But then I think the dollar is going to sell off sometime next year. But this is a good run right now for a lot of our members. Of course, the euro, we bearish the euro, very bearish the euro. We're having this pattern here I'd pointed out to our members where, again, it's a 3, 4, 5 pattern, as you can see labeled on the chart here. A 3-leg, a 4-leg. This was a definite sell signal. Taking it somewhere down in this area here. I think the Europeans are going to have to put some more stimulus out there. They're already starting to secretly buy bonds. Tomorrow we're going to get word on their banking, which banks failed their audit test, as far our liquidity test. And then on the 27th, on Monday, we're going to get word on just how much they're buying in bonds. So that is going to be bullish. The European Union, but it will be bear in the stocks, and it'll be bearish the euro. So I think the euro is going to come down and test this low down here. The pound, well, we're going to be bullish the pound. We're not ready yet. All right, it's still in this huge down track. It's just not looking good right now for the pound, but eventually this thing is going to reverse around. We're getting some bullish divergence on the pound. That tells me it's getting ready. Not quite. You can see those lower lows, and you can see the MACD is, kind of doing one of these things like this, as this is doing that right there. So we're getting a pretty big divergence in the indicators and the price action. That tells me this thing could be running back up. I don't know the timing of it, but that tells me we're forming a bottom down here. And this to me is a traditional bottom where you get this this kind of thing like that. That is how bottoms are formed. Not the bottom where you go boom and boom like that. So this is a more traditional bottom that you would typically see. It's kind of one of these kind of patterns like that, and then the thing just kind of does one of these things, and next thing you know, you're way up here again. All right, so that's what we're going to be looking for in the British pound. So unlike the euro, in the euro we're looking for shorts, in the pound I'm going to be looking for longs. That's kind of how I'm seeing this. In the gold market, well, really in the gold market, we're turning back down again. Again, here's this infamous 3-4-5 pattern here. I'm seeing us coming back down and probably possibly testing this low. I had an iron condor trade on gold futures, closed it down for about 55-60% max profit. I had shorting some puts in SLV for silver, closed that down for about 55-60% profits, and I'm just going to let this thing pull back a little bit. So that's kind of where we are with both those. Oil, again, oil is still got more ways to go to the downside. I mean, this thing is an ugly chart. If you want to be bullish, I think if we break this level here, we're going to be down to 75 pretty quick. You can see it's a very key pivot point for us. I think it's going to break. I think it's going to go lower. Nat gas, we had this break. If I move it up, you can see the break. If I move it out a little bit, just so that you guys can see a little bit better. This is kind of where we're sitting here. When we broke this area here with natural gas or UNG, I said that's probably where we're going to go. We got our 3, our 4, and our 5 leg. So typically on a 5 leg, it runs lower than the 3. It also gives us a bullish divergence, which tells us that it's a 5 leg. So we're probably going to go through a very choppy bottoming period here. Again, if you were to draw one of these kind of things like that, it could take some time. So this is to me, and I was in I shorted some puts in Nat Gas. I took it out for about a 63% max profit. But this is kind of where we're sitting right here. You can trade UNG, which is another good one to trade if you want to trade the futures market. I won't go through the wheat. I won't go through some of the softs and some of the futures here, but I wanted to just cover those items. I think they're very important. So just to round out this conversation here, again, as we go into Monday, I'm looking at 968 as a possible resistance point to the upside. I'm looking at the 943.27 as a possible resistance to the downside. I think there's more downside risk than there is upside risk right now. We've made some pretty good little profits up here on this nice little quick run up. We got in early down here. You can see also if I come into the 120-minute chart, you can see how we did on this, how we did a double test, just about, right? You can see we came down, and then we just about came down and did that. We got our little bullish divergence, so we had a nice little signal to start picking up some longs. And I was telling the members you can go long in the spiders, or you can play the E-minis, depends on what your fancy is. But that's kind of where we're sitting right now. You can see on the 120, as I said before, we got the bearish divergence. So that tells me we're going to get a little bit of a pullback, probably the 1943 area, which is where the 50 EMA is sitting. All right, everybody, and one final reminder, we got our webinar once a month. Be on the lookout for it. It'll be free for you to attend. Look forward to seeing you there. Otherwise, have a great weekend, everybody. Members, I'll see you Sunday night in our Secret Trader session. Have a great weekend, everybody. Take care.